Target Trading Academy.
Good afternoon, everybody. Preston Vogl here at Target Trading Academy with today's Micros Market Recap. I've been getting a little late to this video. That's okay, but it is well past the New York close. It's almost 5 o'clock here Eastern time. It is Tuesday, July 25th. Let's get right into it. So oil, micro oil here, opened inside of its range from yesterday, just below that close. We got it right away. We had a response at that edge. 1, 2, 3 responses ahead at edge. And then we almost had one there. So quite the day. It was a little slow and choppy, but pretty decent day for trading today in oil. But with that said, we are finishing net positive in oil. And then gold, we're starting to see some participation fade into the other contract, the December contract, but not enough for us to really warrant the switch over. I mean, it's a lot. It's really volatile, that other contract right now. But as far as gold goes, we opened ever so slightly below that close. We had a dip down, and then we got the close, and then we just fought this edge once, twice. Third time we broke it, hit the other edge, bounced right off. And then you can see here that they fought it again, trying to bring it down once more. So about 4 times, and then they just took it up. And you can see how that panned out for them as well. So we are finishing net positive in gold. And then our equities, no matter how slow it was today, but it was a really decent day. If you were, especially early morning and towards the later afternoon, probably from 10:30 to 2, it was pretty lackluster, I would say. Initially, what we saw opened right inside that range. We got to that close in the ES here, and then we had some response at that HVA. Another response, another response, another response, another response, another response. Blew through, and then you can see just at 10:30 mark. After that, it started fading, but we still had some responses. But you can see this, the quality started going down, and then the volatility, well, not volatility, but the participation became really tight and congested, and then we had some bounce of volatility that drove it up. But ultimately, we are finishing that positive in the ES. And then the NASDAQ, micro NASDAQ, look at that close right there. Massive bars. Similar story, except we never got to our close. We opened inside that range here, and we just went straight up. That close wasn't too far. It was about right here. But they didn't really look back for it at all, and that's okay. But most of the time, that market just wanted to start trending straight up. And you can see we had decent response at those HVA edges here. Once, twice, and then the shorts once, twice. And if you look at the winner loser break-in video, you'll be able to see that as well. And then we had another response right there where they just took it up afterwards and just drove that market up. And then shortly afterwards, towards the close, it got hectic with that volatility. And I imagine it's because they were closing a lot of positions there. Must be anticipating something coming up, and they didn't want to get stuck in the crux of trading when they won't be in the office, where they can't do anything. Who knows? But ultimately, we are finishing net positive in all of our markets today. If you are interested in learning more information about these levels that are drawn the night before the next day's trading activity, feel free to reach out to us, especially if you want to learn the methodology behind it so that you can trade for yourself and not wait for someone's delayed signals or calling out what they're doing, so that you can actually know what you're looking for yourself and be self-sufficient as long as you master the methodology. Once again, feel free to reach out to us. We are Target Trading Academy. You can find us on Facebook or go to our website at targettrading.co. Get in touch with the representative at either location. They'll gladly show you what we do in our rooms each and every day. We look forward to seeing you there.